Task 4 talks about adhering to the specific codes of conduct. Task 4 has 14 qualifying criteria. Let's look at Task 4, Qualifying Criteria 11. Explain the requirements when a representative receives custody of financial products and funds. We will be discussing and explaining sections relating to the custody and safekeeping of a client's financial products and/or funds. To have a clear understanding of what FSPs have to comply with as custodians and safekeepers of clients' financial products and/or funds, we will need to look at a number of relevant sections from different sources, namely Section 10 of the Code of Conduct that deals with custody and safekeeping of financial products and/or funds. Section 19 of the FASE Act that deals with the duties of the FSP relating to accounting and auditing requirements. And Section 3B of Board Notice 123 of 2009 relating to professional indemnity. Firstly, let's look at Section 10 of the Code of Conduct relating to the custody and safekeeping of clients' financial products and/or funds. Here we have an illustration of the client and the financial service provider, FSP for short. The FSP's assets can be divided into 4 components, being 1. The client's assets and products. 2. The client's funds. 3. The FSP's assets. 4. The FSP's funds. As you can see, we have the top half that relate to the client's assets, products, and funds, and the bottom half which relate to the FSP's assets and funds. When the FSP receives documents and/or funds from clients to keep safe and/or in custody on their behalf, the FSP must acknowledge and confirm receipt of such documents and funds in writing. Here we have an illustration of third parties' involvement. It is important to understand that we may have third parties acting on behalf of the client and/or the FSP. The FSP and/or any third party needs to put in adequate safeguards and security when handling and dealing with clients' financial products and/or funds. This makes sense, and it is important that an authorized FSP that handles and deals with a client's financial products or funds need to ensure that they can keep them safe. An FSP is to keep and have a separate bank account for the client's funds. The FSP is to deposit the client's funds into a separate bank account within 1 working day of receipt of those funds. The client's funds and the FSP's funds must be kept separate. The idea here is that the FSP has its own funds that it uses to run its business, which must be completely separate from the funds the FSP receives from its clients that needs to be invested or looked after. The general bank charges on the client's account is to be paid out of the FSP's funds account. This would be costs that are not specifically attributable to the client, such as monthly bank charges. On the other hand, any interest on the client's funds and specific bank charges relating to deposits and withdrawals of the client's funds would be charged directly to the client's accounts. There is one exception from this requirement. FSPs that receive, hold, or in any other matter deals with premiums under a short-term insurance policy do not require to follow the mentioned steps. If we think about it, this makes sense in that for short-term insurance policies, you pay premiums to cover an event and or something that might happen or not happen in an unforeseen future. But you will never really get the money back. So effectively, you are paying the FSP to take the risk should something happen. As compared to the other scenario, where the FSP is investing on the client's, behalf in order to generate a return on your money you have invested. In this case, funds need to be kept separate. An FSP must make sure that all financial products and funds of its client are dealt with in accordance with the signed mandate or instructions given to them by the clients. Clients' assets, products, and funds held by the FSP must be kept separate from the assets and funds of the FSP, as described earlier. The client must have access to his or her funds, less any required deductions, charges, or fees. The FSP must take into account the contractual requirements. Basically, this is just saying that an FSP cannot just keep clients' money, but the client will be liable for charges, fees, etc., should they want to exit or terminate early. The client enters into or gives the FSP a signed mandate and instructions on what to do with his or her funds with regards to the rendering of the financial services. Any document between the FSP and the client must receive the original agreement and document. Next, we look at Section 19 of the FAYS Act. This section is covering the duties and responsibilities of the FSP with regards to its accounting and auditing requirements. It makes sense that the FSP is holding other people's money, its client. They would need to have some sort of requirements to comply with in terms of how they, as the FSP, manages these and how these are accounted for and audited. Remember, we showed that the FSP can be broken down into 4 elements being 1. Client's assets and products. 2. Client's funds. 3. FSP's assets. 4. FSP's funds. Therefore, the FSP has 2 sets of records to maintain and keep, those of the client and those of an FSP itself. Here we can see that the day-to-day transactions of the FSP must be recorded, and the day-to-day recording of the client's records, which comprise of the client's assets and funds. Once a year, the FSP must prepare sets of financial statements for the FSP's accounting records. And once a year, the FSP must prepare a summary of the client's records consisting of assets and funds for audit. The annual financial statements of the FSP must be audited. The client's records prepared by the FSP must be audited. Please note that we have only shown some of the bigger audit firms in South Africa, but the choice of auditors is up to the FSP. A complete list of auditors can be obtained from the IRBA's website. The FSP's audited annual financial statements must be submitted to the registrar not more than 4 months after the financial year end of the FSP. A concept that is important to make note of is that the reference to registrar, commissioner, and authority are interchangeable, as they basically mean the same thing, so don't let this confuse you. The auditor must report to the registrar on the client records prepared by the accountant of the FSP. Remember, you could also use the term commissioner here instead of registrar. The auditor is to report any irregularity or suspected irregularity to the registrar/commissioner. If the auditor is terminated, the auditor is to give a statement to the registrar as to what it believes is the reason for the termination. The registrar/commissioner has the right to terminate the appointed auditor. The registrar must give the FSP reasons as to why the auditor is to be terminated and provide a right of reply to the FSP, and consider the response from the FSP before making a final decision. The registrar must give the auditor reasons as to why the auditor is to be terminated and provide a right of reply to the auditor, and consider the response from the auditor before making a final decision. If the FSP wants to change its financial year end, then this change must be approved by the registrar. If another authority approves the changes in financial year end, other than the CIPC, then the FSP must notify the registrar within 15 days of approval. Lastly, we look at Section 3B of Board Notice 123 of 2009, dealing with professional indemnity. This is important because professional indemnity is a type of insurance cover that an FSP needs to have when dealing, accepting, or handling clients' funds. Here we have an illustration of a company being a legal entity, which has employees. In our case, the company or legal entity would be the FSP and the employee would be the key individual and or the representative. Firstly, we have professional indemnity insurance. Professional indemnity insurance is insurance cover taken out by a business providing professional services. This insurance is to cover the business against losses claimed by client due to negligence of the business. It is important to note that any company providing professional services would take out professional indemnity insurance such as accountants, lawyers, engineers, and financial service providers. Secondly, we have guarantees. A guarantee is a formal assurance by someone to cover the amount or loss. So this is when one party will cover the loss of another party. This is like when a parent guarantees the student loan of his or her child, which means the parent guarantees and or assures the bank that he or she will pay the amount owed if the child is unable to. For example, a parent can guarantee repayment of a student loan for his or her child. So the student would be responsible for repayment of the student loan, but should the student not be able to pay, then the parent is obligated to pay as he or she guaranteed and or assured the loan. Thirdly, we have fidelity insurance. Fidelity insurance is insurance cover taken out by a company or employer against losses incurred by dishonest employees. Fidelity insurance is often taken out when an FSP handles and/or keeps money on behalf of others, such as estate agents, lawyers, and financial service providers. All FSPs must have either professional indemnity insurance cover or guarantees, with a minimum cover which is dependent on the insurance category of the FSP. Only FSPs that receive and/or hold clients' funds and/or financial products for clients will need to have Fidelity insurance cover. The amount of this cover will also depend on the license category of the FSP. Category 1 and Category 4 FSPs need a minimum of 1 million rand for either professional indemnity or guarantees and 1 million rand for Fidelity if needed. Category 2 FSP is a bit more tricky. If the Category 2 does not receive and/or hold clients' funds and/or financial products, then it only needs 1 million rand of professional indemnity or guarantees. But if the Category 2 FSP holds and/or receives clients' funds and/or financial products, then it would need Fidelity cover of 5 million rand and therefore would also need to have professional indemnity insurance or guarantees of 5 million rand. A thing to remember is if the FSP needs Fidelity cover, then the professional indemnity or guarantee must be of the same amount. Lastly, if the FSP is a Category 2A or 3, then it would require 5 million rand cover for professional indemnity or guarantees and Fidelity cover. Here are some possible questions relating to this qualifying criteria. Question 1. Which of the following requirements are not applicable to custody of client funds and premiums? A. The bank account must only receive funds and premiums from clients. B. The account may contain other funds of the FSP. C. The FSP must have a separate bank account at a bank. D. The FSP is responsible for bank charges except deposit or withdrawal charges. Take note that we are looking for the requirement that is not applicable. Pause the video here if you need a minute to think about it. The answer is option B. Option B states that the account may contain other funds of the FSP, which we know is not correct, as the client's funds must be separate from the FSP funds. Question 2. The FSP must have a separate bank account, specifically to receive funds and premiums from its clients, which is separate from any other funds of the FSP. What statement below is true in respect of bank charges? A. The FSP is responsible for the bank charges except the charges which relate to deposit or withdrawals which the client must pay. B. The client is responsible for all bank charges, but the FSP must pay all interest accumulating in the account to the client or owner of the funds. C. The FSP is responsible for all bank charges, but may retain all interest accumulating in the account. D. The FSP is responsible for bank charges, including the charges which relate to deposit or withdrawals. Remember, we are looking for the statement that is true. Again, pause the video for a few minutes and read through all the options and see if you can get the correct answer. Did you get option A as the true statement? Option A is a true statement, as the bank charges are the responsibility of the FSP. On the other hand, the charges that relate to the deposit or withdrawal of funds are the responsibility of the client. This is because the bank charges are not directly attributable to the client and would be incurred by the FSP even if no client funds were in the account. The client, on the other hand, is responsible for the changes of their funds coming in and out of their account because it is charged based on the transaction that happens and therefore can be directly attributable to the client. Question 3. Zanele invested 10,000 Rand with Integrity Financial Services Provider on 1st January 2020. By the 30th of June 2020, Integrity had incurred bank charges of 200 Rand. Of these, 40 Rand related to deposits and withdrawals of the funds by Zanele. Interest accumulated in this period amounted to 100 Rand. Zanele terminates the investment on 1st July 2020. She must be repaid the following amount: A. 9,900 Rand. B. 9,960 Rand. C. 10,060 Rand. D. 10,100 Rand. Pause the video again and take a minute to work it out. So we have 10,000 Rand that Zanele invested, and then we know the bank charges of 160 Rand, which is the 200 Rand less the 40 Rand are incurred by the FSP, so they do not get deducted from Zanele's amount. Then the 40 Rand charges relating to the fact that Zanele deposited her funds and is going to withdraw her funds is incurred by her and must be deducted from her investment. Therefore, we get 9,960 Rand, but we must add the 100 Rand interest she earned, making the amount that needs to be repaid to her being 10,060 Rand. Therefore, the correct answer is option C. Question 4. There are certain requirements that need to be met when an FSP receives money from a client without a bank being involved. Which one of the following requirements is not applicable? A. The FSP must issue a written confirmation when the money is received. B. The FSP must pay the money into a bank account within 24 hours of receipt. C. The FSP must pay the money into a bank account within 1 business day of receipt. D. The FSP must take reasonable steps to ensure that the funds are adequately safeguarded. Remember, we are looking for what is not applicable, meaning that most answers will be what should happen, but there is one that is wrong and that is not applicable. You need to identify that one. Pause the video for a bit and read through the question and all the options and see if you can identify the answer. Option B is the requirement that is not applicable. The FSP must pay money received into the bank account within 1 business day of receipt and not 24 hours of receipt. Remember, a business day is Monday to Friday, excluding public holidays. Question 5. A Category 1 or 4 FSP who does not receive or hold clients' funds or financial products must maintain: A. Suitable guarantees of 1 million Rand or suitable professional indemnity of 1 million Rand. B. Suitable guarantees of 1 million Rand or suitable professional indemnity and fidelity insurance of 1 million Rand. C. Suitable guarantees of 1 million Rand or suitable professional indemnity of 5 million Rand. D. Suitable guarantees of 5 million Rand or suitable professional indemnity of 5 million Rand. The correct answer is A. A Category 1 or 4 FSP who does not receive or hold clients' funds or financial products must maintain suitable guarantees of 1 million rand or suitable professional indemnity of 1 million rand. Question 6. A Category 1 or 4 FSP who does receive or hold clients' funds or financial products must maintain A. Suitable guarantees of 1 million rand or suitable professional indemnity of 1 million rand. B. Suitable guarantees of 1 million rand or suitable professional indemnity and fidelity insurance of 1 million rand. C. Suitable guarantees of 1 million rand or suitable professional indemnity of 5 million rand. D. Suitable guarantees of 5 million rand or suitable professional indemnity of 5 million rand. The correct answer is B. A Category 1 or 4 FSP who does receive or hold clients' funds or financial products must maintain suitable guarantees of 1 million rand or suitable professional indemnity and fidelity insurance of 1 million rand. So basically, when you receive or hold clients' funds, then you must have fidelity insurance of 1 million rand at least. And then an option of guarantees or professional indemnity of 1 million rand. So remember, if you hold or receive funds of a client, you must have some fidelity insurance. Question 7. A Category 2 FSP who does not receive or hold clients' funds or financial products must maintain A. Suitable guarantees of 1 million rand or suitable professional indemnity of 1 million rand. B. Suitable guarantees of 1 million rand or suitable professional indemnity and fidelity insurance of 1 million rand. C. Suitable guarantees of 1 million rand or suitable professional indemnity of 5 million rand. D. Suitable guarantees of 5 million rand or suitable professional indemnity of 5 million rand. The correct answer is A. A Category 2 FSP who does not receive or hold clients' funds or financial products must maintain suitable guarantees of 1 million rand or suitable professional indemnity of 1 million rand. So important to note that for Category 1, 2, and 4 FSPs that don't hold clients' funds or financial products only have to have either guarantees or professional indemnity in place to the minimum value of 1 million rand. Question 8. A Category 2 FSP who does receive or hold clients' funds or financial products must maintain A. Suitable guarantees of 1 million rand or suitable professional indemnity of 1 million rand. B. Suitable guarantees of 1 million rand or suitable professional indemnity and fidelity insurance of 1 million rand. C. Suitable guarantees of 1 million rand or suitable professional indemnity of 5 million rand. D. Suitable guarantees of 5 million rand or suitable professional indemnity and fidelity insurance of 5 million rand. The correct answer is option D, being suitable guarantees or suitable professional indemnity of 5 million rand and fidelity insurance of 5 million rand. Remember that whenever an FSP receives or holds clients' funds, then they will need some sort of fidelity cover, no matter what category. then the amount will depend on the level of risk and category as outlined in the material. Question 9. A Category 3 FSP who does receive or hold clients' funds or financial products must maintain: A. Suitable guarantees of 1 million rand or suitable professional indemnity of 1 million rand. B. Suitable guarantees of 1 million rand or suitable professional indemnity and fidelity insurance of 1 million rand. C. Suitable guarantees of 1 million rand or suitable professional indemnity of 5 million rand. D. Suitable guarantees of 5 million rand or suitable professional indemnity and fidelity insurance of 5 million rand. Hopefully by now, you can see that only options B and D are possible solutions, due to the fact that the FSP does hold client funds and financial products and therefore would need to have fidelity cover. So which option do you think it is? B or D? I hope you selected option D, being suitable guarantees or professional indemnity of 5 million rand and fidelity insurance of 5 million rand. We will go through a summary of this in the final overview. So let's go through a final overview of what has been covered. We first looked at the safeguards and safekeeping that needs to be put in place by the FSP when dealing and handling of clients' funds and or financial products, as well as the separation of bank accounts between clients' funds and the FSP funds. And noted one exception for the separation of funds when it comes to short-term insurance policies. We also noted that the FSP must deal with the client's financial products and funds in accordance with the signed mandate and instructions. We then discussed the accounting and auditing requirements for the FSP, as well as the role of the registrar/commissioner. Lastly, we looked at the types of insurance cover an FSP must have in place and the minimum cover required depending on the category of FSP and whether or not they receive and or hold clients' funds and or financial products. We hope you enjoyed the video and learnt a lot. Please make sure to check out our other RE videos.